The Nigerian stock market recorded its second weekly loss in the year as the all-share index declined by 0.13% in the week ended February 18 to close at 47,202.3 points following the 0.16% decline recorded in the previous week. Well, this is according to the information contained in the weekly stock market report by the Nigerian Exchange Group. The benchmark index, all-share index, declined by 0.13% from what was recorded last week from 14,140.48 index point, while the market capitalization followed suit to close at 25.43 trillion naira. These represent the second weekly lows after recording 5 consecutive weeks of appreciation, with a year-to-date return of 10.36% and a month-on-month and to-date return of 1.11%. And so let's look at the total turnover of 1.7 billion shares, worth about 30.7 billion naira in 24,767 deals were traded last week by investors on the floor of the exchange, in contrast to a total of 1.3 billion shares valued at 22.7 billion naira that exchanged hands last week. Well, let's look at the activities now in terms of sectorial movement. The financial services industry led the activity chart in terms of volume of shares traded, with about 1.06 billion shares valued at 12.20 billion naira across 11,000 deals, contributed about 62.14% and 39.66% to the total equity turnover volume and value respectively. The consumer goods was up, where if you look at other indices, which finished higher with the exception of NGS Premium, which declined by 0.29%. You have banking declining by 0.86%. You also have oil and gas declining by 3.45%, while industrial goods depreciated by 0.32%. All right, it's time to bring in Mr. Ambrose Omodion, who is a regular analyst on the SOE, Chief Research Officer, Investor Consulting Limited. He joins us now. Thank you for your time, Mr. Ambrose Omodion. We appreciate you for coming on the show.
Thanks for having me again.
Well, if you look at the market last week, there's a bit of up and down, but bring us to speed. Let's look back at the market last week and the performances so far. So far, we've seen the market continue to experience a volatility last week, but investors lost about over 50 billion naira last week. So what you make of the movement and the direction last week?
Yeah, actually, I've said it on this program not twice, not once, not 3 times, but I'll repeat it again that when it comes to any season, it's more volatility than direction. And that is playing out already in the market. The previous week, market was down negative 1.6, and this week under review, had a negative 0.13. Then the market is looking for a direction or a trigger, because all players in the market are focusing on what we call corporate action and economic news. Okay, roughly during the week, the news that came from, starting from the inflation figure, consumer price index, and the GDP were positive to support the capital market. At the same time, the earnings that we have seen so far are beyond expectation for that. We expect that this also influence the market positively. Considering that the corporate action that came to the market during the week from 2 companies, especially from United Capital and Nigeria Google, these are also numbers that tell you that these companies have done well in 2021. And also, if you look at post-pandemic shift in terms of company performance, which also have supported the price of the stock to where they are today. So for me, seeing a kind of a little pullback in a mixed market is not just something that should send any panic, but rather investors should look at their strategies and also fine-tune it and wait for what's going to happen between now and end of the quarter. Because we're going to expect more, we're going to see more corporate action going forward, and that will reflect in and out of position of many traders or players in the market. That means this volatility is likely to continue. But the good thing is that when you are in a volatile market, you look at the price action, you look at the volume, also can manage my loss. That is how to play the market. But the market still remains really, for me, bullish for investors for short term and long term, because we're seeing the positive economic data, also company performance are still in the north direction. For me, this is good thing for our market, but don't be carried away with price direction. As we speak now, most of the stocks are already on fire on a high pace because of what expectation. The one that came from local, that's the company that grew their payout from 70 kobo to 150 kobo, it presents about 114% increase in payout. This kind of thing that will also guide investors where will they pay their time going forward, and dividend season is where we are now.
Before we get into what to expect from the market this week, let's look at some highly capitalized stocks worth about 1 trillion in terms of market capitalization. You have a stock like Dangote Cement, Nestle, MTN, and Boa Food. Well, if you look at combination of these four highly capitalized stocks, losing about 0.22%, closing at 18.1 trillion naira from 18.14 trillion naira the previous week, reflecting about 40.16 billion. The four highly capitalized stocks lost about 40.16 billion last week. How do you attribute the fact that there's been some buying interest in the market and for some of these stocks as well, but yet we are seeing a decline in some of these highly capitalized stocks?
Yeah, actually, as you just mentioned, these four highly capital control about between 58 to 70% of the market. That means whenever there's an uptrend in any of the stocks, it will influence the all-share index, which is the NGX index action. But for we as analysts or investors, most times this index does not give you the proper picture of the market. That's why you look at the so-called sectorial index to guide you more. Because most of the stuff, when they get, the market might be in red, so having a negative market spread, or still go up because of the high gap. For you to know that market is really in a bullish trend, look at what we call the other sectorial indicators to tell you whether there is price sentiment in those sectors. Once you confirm it, they say that. That's why people when vaccine kind of profit taking against high cap stocks, market remains strong because most of the medium cap stocks and the future stocks on the exchange are gaining because people are buying into them as a result of what dividend expectation. For me, those high cap stocks are good for us to manage our portfolio because of the defensive nature of the price of those high cap stocks. But most times, the low cap stock, medium cap stock, and the futures won't give us more return, most times as expected. But for those high cap stocks, you can use also to balance your portfolio so that it can help you to guide against when the market is on your way against you. It can help you to manage your portfolio. But those high cap stocks, they're only there for kind of protection because they are the ones that control the market. We talk like as you mentioned, Dangote Cement, MTN, Nestle, and Etsy, and can add other ones that want to add the back GTB and Metabook. The major one is that Boa Cement, Dangote Cement. Now that Boa Food has also come along the line or come on board, you can see that they will have influence on the market. That is why as a trader investor, look at the world of sectorial index to guide.
Let's dwell more on Dangote Cement and the Boa Group, it rival Boa Group now, because if you look at Dangote Cement PLC, which is currently the second most valued company on the exchange and makes up roughly about 26% of the total market capitalization of all stocks worth over 1 trillion naira. Yes, we've seen a bit of revenue which grew by 16.53% in the third quarter of last year, bringing the value of the stock up by 4.94% to about 82.54 billion. That's 86.42 billion, rather 62 billion in the third quarter 2020 so far. So the question I would like to ask you, how much of rivalry, because the market capitalization for these two stocks, the Dangote Cement and the Boa Cement, seems to be on the same page. 4.66 trillion for the Dangote Cement and 4.66 trillion for the Boa Cement. How much of rivalry is this putting into the investors' pocket? Let's start from there, because I guess the investor seems to be enjoying this rivalry as long as they continue to pay off for them.
No, if you look at the stock you mentioned, there are two different stocks that have different characteristics. That's why they are in the same industry. cement payout compared to what we are seeing in Dangote, they are different entirely. But because BUA strength is coming, the price is relatively below 100 naira. But if you look at their payout and their earnings, you can't compare with that of Dangote. Dangote has successfully done share buyback. That also impacted their performance because all over the world, the big cap companies or the high top companies are the ones that go to buy back. That's not to stabilize their price. That's also to give them another valuation. And that has Dangote has successfully done in Nigeria market. Two times, it says that Dangote is another class of stock in that industry. For me, Dangote has also performed the level that it has supported its payout. Look at what they pay out in 2020, 16 naira. Their earnings for that year was more than. But the previous year, the base it was like the payout was more than their earnings. But now they have matched because this continuous buyback and also using their shareholding is also impacting their earnings, making their valuation stable, price stable. For me, that has supported Dangote. And Dangote also being a company that has not really took only one as operational outside the shop Nigeria. That's also playing out on the company bottom line. I will see that will also help them to sustain their price going to the future. And if they come with their results and they pay it above that 16 naira, I will see that the price will easily also go to around 300 naira. But no matter what we pay, I don't think we are going aside at that price. But because of their sharing issue, they are among the high cap stocks or the highly influenced stock on the exchange because of their sharing issue and their price. For me, two of them are the same industry, but they are not the same category because Dangote have show where it's coming from. Until we see more of BUA, that is where we can see this level. But BUA, for me, especially the tentacle, both in food, in cement, and other business, for me, it's coming up also to become another role of Nigerians facing their role because if it's something that is listed, it's an opportunity for everyone to partake in the wealth creation process.
Okay. Now, let's look at the week now. I mean, what to expect in the week is the first trading day of the week, about a few hours into today's trading already. I don't know how much the market is doing now. If you have the information, you can bring us to speed with that. But looking at other stocks now, the MTN was also part of that movement we saw last week. You have Airtel Africa, you have BUA Cement, Dangote Cement, Nestle, MTN PLC, and of course recently we are having BUA Food joining in that league of stock with over 1 trillion naira with market capitalization. What's the trend like for this week?
Yeah, the market decided on a positive note for the week. Knowing that more companies start to release their audited account this week, because in any season, release date is very important, and many investors or players are positioned ahead of its release date. And as they come and they meet expectation, market will react in that direction. If the company come and it didn't meet market expectation, they're about to be sell off to put the price down. But once they beat their market expectation, they're about to be more accumulation in that stock, which will put the price up. For me, what we have seen as market is open this morning is a sign that market is still waiting for more information. Stock like UCAP, as I mentioned earlier, that released results last week and the P1 has been about. So on full B, getting 10% maximum for the day. Also, you can see stock like Honeywell on that top. We are seeing those stocks, seeing Mia Baker also joining the rally. We are seeing that investors are looking at where they can take advantage of what information at the same time. Because I said, this dividend news is another fundamental news that will have influence on stock and also tell you how the company is doing. So in order to know that whether the company is ready or not. Companies that are not paying dividend for over years, yes, they might be good company, but depends how investors perceive or see the company. If the company that is paying dividend regularly, the part of strength for that company. As we are seeing already, what we have seen in Yuka and the Nigeria and others were expecting that they will release results this week or going forward before the end of the this will shape the market. That's why volatility will continue. And don't forget that as we're entering towards a new month, the last month of the year, we expect to see NTC meeting. These are the volatility that will influence the market up and down. But investors will not be carried away, let their investment objectives guide them. I expect the bull market or a bullish sentiment for today and also a mixed trend between now and end of the week.
Okay, just before I allow you go, Mr. Ambrose, the GDP figure came out last week. How much of that are we seeing impacting the market and how investors reacting to it? Then I also want us to look at the fact that for those stocks playing in the agri sector, the consumer goods, if you prefer to put it that way, and then the oil and gas sector, The oil and gas sector contributed about over 92% to the overall GDP in 2021. We also saw the agri sector contributed about 26.84% to the overall GDP as well. There are some stocks playing in this sector. You know, how much of growth should we expect going forward?
Like I just said earlier that the pandemic shifts in terms of company performance is also reflecting on the GDP. Even before the release, we know what we're expecting. But for me, it's not that the non-oil sector is the most one kind of impact on GDP. It tells you that companies in that sector are bound to work do well. You can see what is happening in the agro sector, Okomu results, livestock results, and the Fresco results. It shows that was what is happening. It also looks at the manufacturing results sector. There's improvement in there. Despite high inflation and the people kind of struggle to buy their purchasing power, a bit low. But we're seeing activity. That means we're recovering from the 2020 down situation. But I will tell you that this year, for 2022, we should know where the economy, because the base year that it has been negative will not change. We want to know really where we are going. That's why the first quarter 2022 GDP is very important to know if really we are in the right direction in terms of our recovery, whether it's still weak or strong. Because we expect that the effect of the negative base or effect of the base year effect also start phasing out from the figures. Once we get sure that right now, we cannot know exactly where we are going. For me, the GDP impacting also guiding investors on what to see that yes, we have seen improvement in the non-oil sector. Tells you that our economy is gradually finding its feet. That is, we are not over depending on oil again, but we need to do more so that the economy can run and depend less on what on the oil income or revenue. We know that for now we can't do that oil, but once we start bringing all that